Hi guys, welcome to today's video, which as you can see here is based on Jackson Hole. There's obviously a big economy meeting coming up this week, and I'm getting a lot of messages just asking me what my views are, what we can expect to maybe see technically in the market. So hopefully you get a little bit of insight from this, and hopefully it helps you in some way. But obviously, as always, please just pause the video and make sure you're comfortable with this. And also, if you enjoyed the video, as always, feel free to subscribe to our channel. We try to upload once or twice a week, just as much as time allows. Now, what I'm going to do is walk you through technically what we might see in the market this week. Now, I think, just to get it out there right off the bat, I don't think anybody knows what's going to happen. You will have all of the market analysts of the day, CNBC, Bloomberg, they'll all have their opinions, just like what I'm about to present to you is opinion. But what I will do is I'm going to show you the levels in the market that you should be aware of. I think that's key. I think when we start to understand that charts provide us the sentiment of the overall market, there's nothing wrong with charts. You might be coming through here, as a fundamental trader, investor. You might have your economics degree. That's all good, but technically in the market, this is really what we need to be aware of, because once technicals start to break down, the rest follows. That's just the way it works. Now, I think what I want to do is just touch on the Dow Jones. Now, Dow Jones is the most important index on the planet, and as you can see, we're in a bullish uptrend at the moment. This is the weekly chart. Yes, we've had to deal with some dips, but it's very clear that this upward trend line is being respected. I think, with the meeting this week, I think we need to be very, very cautious if we get a breakdown on Friday. I think we need to get a close on Friday before below this level, and I think that would be the key for me to get super defensive. This is the S&P 500 equal weighted index. Now, as you can see here, we are finding support here, just a logical area of support. We had an issue at the end of May where we broke down slightly. That would have been a defensive setup. That would be a case of just saying to yourself, and with your risk and position size, etc., okay, let's not take any chances here. Let's wait and see how things develop. As we can see, we started another bullish uptrend for the market. Lots of money to be made, but we've obviously had a bit of a breakdown recently. We found support where we would expect to find support. So if we get a break to the upside, if everything's positive this week, then happy days, great. But again, I think we need to be super mindful, super defensive if we break below that level. Tech is another one. It looks very, very similar to the chart for the Dow. Again, I think we need to get defensive if we break below this level here. That just makes a lot of sense. Now, the Treasury bonds, obviously TLT is the ETF for the 20-year Treasury bonds, and we've been in a huge bullish uptrend, for pretty much since the beginning of the year. And although recently we achieved said profit target, we've had an immediate breakout that was pretty unexpected. It wasn't something I was expecting, but we got it. So we just have to pay attention again to the levels in the market. So we've had a breakout here. It looks like we've had a bit of a retest in the market, and depending on what happens here, obviously we understand that the Treasury bonds are defensive plays in the market. So it stands to reason that when the market, the volatility ramps up, you might get a lot of, I suppose, defensive traders, investors starting to just, scream for the safety of bonds, and for another chart that I'm about to go over in just a second. But provided that we're above this level in the TLT, then I think we can be bullish But again, if we break below this level on the back of the meeting this week, I think what you can probably expect to see is that will correlate with good news in the market. So what you'll probably find is if treasury bonds start to break down here, you'll probably find that the stock market is moving up. And that is simply a scenario that you might want to kind of pay attention to. The other one I want to talk about is gold. Now, this is obviously the gold index, and we can quite clearly see, we've had a breakout here. I posted a video on this way back in the middle of June when we had this breakout in gold. And, those that have obviously jumped on the back of gold are doing very, very well at the moment. However, we do need to be super mindful of, again, the defensive nature of the market. If the Fed come out, if Powell comes out and says something that the market doesn't like, again, you're going to see everybody running for safety. Gold is that safety. Silver is another area that has been performing very, very well since the beginning of the year. So that's something to certainly be aware of. Now, the other concern that I maybe have at the moment, and this is well documented, you could go back over all my videos over the last few weeks. I've got concerns on the Russell 2000 at the moment. Certainly, if we think about a basket of 2,000 stocks breaking below support, that wouldn't be great news for stocks in general. There's always one index that gets the party started when we start to talk about real market declines. This is something that I've talked about, for the last couple of years now, although my YouTube channel is pretty new. For those of you that have been following my blogs for the last couple of years, you'll understand that I know full well when to get defensive, and that would be a defensive scenario for me if we were to break below this level. I have slight concerns here at potential resistance. What could possibly happen is we might get resistance here and it falls away again. Equally, if stocks perform well this week, we could absolutely, move through that, no problem. But, that's what technicals do for me. They allow me to just kind of see, when to get defensive, when we might be a bit more aggressive or a bit more bullish than normal. And the final chart that I really want to talk about is the value line geometric index. Now, again, this was not great news for the market, but again, we've rebounded very, very quickly. So it'll be interesting to see what happens here, and with this level that we have, do we start to move to the upside? That would be good news for stocks. If we break below this level, then that's going to be a bit of an issue. So those are the levels that I feel like you should be watching pretty closely. Obviously, there's many, many more charts that I could walk you through, but I don't want to take up too much of your time. This is just what I do. I'm a bit of a technical analyst geek. But if you don't know, I suppose, who I am, I'm Sam, and I'm currently registered with the CMT Association. I'm working my way towards my chartered status at the moment. So, technical analysis is what I do. It is my life. And I also run honeystocks.com trading school. So if you're somebody that's maybe beginner, maybe you're somebody that's struggling a little bit, maybe you don't have consistency, maybe you just don't know what you're doing, or maybe you're just at the beginning of your journey and you'd like to just not learn from losses, then feel free to maybe check out our website. But thank you very much for watching, and maybe I'll speak to you soon. Thanks.